Hello, welcome to Best School Online Tutorial. I am your teacher, Gracious. Today, we will conclude on the topic profits. In our last class, we were able to establish the meaning of profits, both the accountant point of view and the economics point of view. We are also able to differentiate between gross profits and net profits. Today, we will be looking at some of the terms in profits. Now remember, we were able to discuss some of the content that can be found in profit and loss accounts. Today, our objectives are first to calculate fixed assets, calculate the gross profit, and lastly, differentiate between fixed assets and liabilities. Now, definition of terms. First on our list here is fixed assets. Fixed assets here refers to tangible assets. They are properties that are owned by a firm or a company which cannot be easily converted to cash. Very good example, we have plants, we have equipment, as well as machinery. And then we have the current assets, which is also known as the liquid assets. It is the opposite of fixed assets. They are assets that can easily be converted to cash. Examples are the current stock available in the shop, the cash that you have in the bank, and the amount of money that your customers owe you, or the amount of money that the customers owe the firm. And then we have the current liabilities. Current liabilities here, also known as the short-term liabilities. Here they refers to the debts that a firm might probably owe the supplier of certain goods or services. So current liabilities are debts that is to be paid by a firm. Then we have working capital, which is the capital that is used for the day-to-day running of a business. Now you know we have different type of capital. So what we are considering here is working capital, which is a capital for the daily running of a business. Now, in order to, we have average stock. But in order to arrive at working capital, it's going to be the current asset minus the current liability. We have the average stock. And in our last class, we were able to establish the difference between opening stock and closing stock, where we were able to look at opening stock as the stock available at the beginning of the year, and closing stock, the stocks that are available at the end of the year. Now to arrive at that, it's going to be opening stock plus closing stock divided by 2. That will give us our average stock. And then gross profits. Gross profits is sales minus cost of goods sold. Net profit is gross profit minus expenses. Now last class, we were able to establish the difference between the gross profits and the net profits. Now, this is an example for us to follow, to work on. It says the following are the trading figures of Uche Enterprise for the year ended 31st December 2001. From the information provided here, we can actually get our fixed assets, current assets, gross profit, as well as our working capital. Now, to get our fixed asset, the question here says, from the above, calculate the fixed assets, working capital, gross profits, and net profits. To get our fixed assets, we will pick out our properties. Like example, we have the premises, machinery, plants. These are examples of fixed assets. Now our premises is worth 20,000 naira, machinery 20,000 naira, plants 30,000 naira. Now the total value of our fixed assets is 70,000 naira. This is how we derive our fixed assets. And then the working capital, which is current asset minus current liabilities. The current assets here are the cash, debtors, and stock. Cash here is 20,000 naira. The debtors 30,000 naira. Stock 50,000 naira, which will give us a total of 100,000 naira. And our current liabilities is just 20,000 naira. Therefore, to get our working capital, it's going to be 100,000 naira minus 20,000 naira. This will give us 80,000 naira as our working capital. And then the gross profit is sales minus cost of goods sold. Our sales is 200,000 naira, while the cost of goods sold is 100,000 naira. By the time we deduct 100,000 naira from 200,000 naira, we will arrive at 100,000 naira. This is going to be our gross profit. Then our net profit is gross profit minus expenses. Now from that information, we can see that the only expenses that was incurred is rent, which is just 10,000 naira. So our net profit is 100,000 naira minus 10,000 naira, and that is 90,000 naira as our net profit. So this is where we are going to stop today on profits, and this is the conclusion on the topic profits. So these are assignments for you, a very simple one for you to follow. All you need to do is to get yourself familiar with those terms earlier. If you are familiar with those terms, it will enable you solve this calculation with ease. Now it says the following information is from the books of Justice, whose sale book for the year ended 31 December 2005. Now these are the information below. Now we are told to calculate the gross profits, average stock, and net profits. So with the formulas provided, we can easily attempt this assignment. Thank you for your time. Thank you for your attention. I'll make the material available in the Google Classroom, so you can access it and submit your assignment there. Thank you.